Is it possible to retire off S&P 500 index funds by 2030? I mean, that's only 8 years from now, and majority of financial advisors, by the way guys, I'm not a financial advisor, I'm just a guy on YouTube that likes to do stocks and all, so take everything with a grain of salt, but majority of the financial advisors out there do suggest you to invest in the S&P 500 regularly all the way up until 65 years old, and then maybe you can retire with the $1.52 million you have, if you can retire, because who knows how inflation will be then. Recently, I did a poll on my YouTube channel, and majority of you guys, close to 50% actually, don't have anything in the S&P 500, which is hilarious, but also tells me one thing, that you guys are going all in into Tesla stock like I am. No, I'm kidding. That's not what it means. Or it could be. I don't know. But what this tells me is that majority of the viewers that are watching my videos are young guys. Mid-20s, probably early 30s, probably even earlier than that. Early 20s, late teens. So it makes sense to hold no index funds because you're younger and you can take more risk. Another thing that tells me is that you guys don't want to be making 7%, 8% on an annual basis. You guys want to make that 50% and retire a whole lot sooner. Like me. So that's pretty darn interesting. But in this video, we're going to look at the S&P 500 index funds, mainly the main four: SPY, IVV, QQQ, and VTI. We're going to see how much you need today invested in each individual index funds, which is the one I just listed, all the way up until 2030 so you guys can retire comfortably. So sheesh, it's going to be a very epic video, and I hope that you guys have your notes, your popcorn, chillin' and ready for this delicious video. So if you guys are ready, don't forget to smash that like button and subscribe if you haven't already. Let's go. Starting with monthly expenses by 2030. We're gonna know how much our monthly expense is going to be by 2030 in order to cover it and then have some after. That's how we can really retire comfortably. Doing a little bit of the research, and yes, it's the same exact research that I've been doing for the other retirement videos. If you guys haven't checked that out, check it out. We look at Tesla, Apple, Nvidia, Microsoft, and so on and so forth. So if you guys want to retire off those stocks and you guys have high belief in them, check it out and see how many shares you need now. But back to the average monthly expenses. In North America today, it's a little over $5,000 a month. Like, can you guys believe that? $5,000 a month will just cover your expenses, your groceries, your electricity bill, I don't know, if you got mortgages, I guess. I mean, that's a lot of money, $5,000 a month. That's 60 grand a year. And that's the average. That's crazy. But I did more digging and there's some good news. It seems like this is for a family of two, so whew, that's a relief. And it makes sense because it's a whole lot easier to make 5 grand a month with a significant other, with a roommate, your girlfriend, boyfriend, wife, husband. It's a whole lot easier than making it by yourself. But in this video, let's be selfish. Let's say you have your own goal that you want to retire off individually on S&P 500 index fund by 2030. Well, in that case, you're lucky because your monthly expense drops down to $3,200 a month. So 5,000 to 32, which if you look at it, it's actually a whole lot cheaper to have someone else with you, helping you, living with you to actually get by through life. But around $3,200 a month or 40 grand a year is not bad. Now, obviously by 2030, $3,200 is not going to have the same buying power because of inflation. So what I did is that I slapped on 5% inflation rate every single year up until 2030. And this $3,200 a month turns to $4,600 a month, which is just absolutely insane. Now you're really gonna be paying 5 grand a month for just expenses alone by 2030. So that's crazy. Inflation is 5% a month every single year up until 2030. Most likely it'll be less averagely because, you know, Fed is being aggressive and tightening and all that kind of good stuff. But who knows? Maybe another pandemic is just down the road. Knock on wood. That it won't happen. Not that I want it to happen. No, thank you. I had enough of that. Now, this $4,600 a month is, you know, I'm guessing it's a minimum lifestyle, living paycheck to paycheck, and you don't want to live that lifestyle. So let's slap on another 1,000 to that, making it $5,600 a month. Heck, let's even round that up to 6,000. So 6,000 a month or $72,000 annually, which is just absolutely insane. You need to be making over 70 grand a year by 2030 to live comfortably. Man, that's crazy. Man, rip the next generation. Now, the amount of money that you need to have invested to retire off, because obviously when you make that money, you don't just, take it out of investments, because then you'll burn through it so quickly, you're gonna become broke real quick. So you need to have that money invested and you just live off the interest, live off the compounding growth, the growth year over year percentage. That's what you would live off of, because then you'll have your principal and you're just making money off the interest. The amount of money that's needed to live off comfortably to make that 72 grand annually a month and not run out of money for about 40 to 50 years at a 7% growth rate year over year is about $1 million. And for the S&P 500, it averages between 8 to 10%. but we're going to say 7% just to be conservative. And again, with $1 million and a 7% growth rate over year return, you can live off that for about 42 years. So that's a lot of time. Alrighty, finally, now that we have our monthly expense budget and how much we need to live off of it, let's go find out how many shares we need for these S&P 500 index funds. If you guys are ready, man, smash that like button. Let's go. So here we got SPY, we got IVV, we got QQQ, we got VTI, and we got the current stock prices as of today, the day I'm recording, which is about November 28th, November 29th. These are the prices that are at the moment of the recording of this video. Then we got the dividends for each one, 1.6% SPY, 1.56 IVV, QQQ 0.71%, VTI 1.6%. So it seems these S&P 500 index funds usually trade nearly or close in the same dividends with each other. The expense ratio, by the way, if you guys don't know what an expense ratio is, it's pretty much what the index fund charges you guys for handling your money. Yes, they do charge for these things. But it's not much. As you guys can see, for SPY, it's like 0.09%. IVV is 0.03%. QQQ is a bit high. I mean, that's pretty darn high at like 0.2%, and VTI of 0.3%, 0.03%. So let's go ahead and put 7% for all of them and let's see what we get. SPY, IVV, QQQ, and VTI, and just look at these numbers. I can see why half of you guys don't have, a lot in index funds. I mean, shares value today, you need to have all of them really. I mean, they're all uniformed, close to $600,000 in order to have $1 million by 2030. I mean, that's just insane. That's crazy. Again, these are safe for your money not to lose 50% overnight, like how Tesla is. But again, you need to have almost $600,000 in to make $1 million by 2030. Yeah, at this point, I think most of you guys watching, pretty sure you guys don't have $600,000 laying around to just pile into any of these index funds. That's just crazy. And yes, this is the first time doing this because I like to do these with you guys. I just make the formulas ready. I test it out. Once I know it works, we do the actual thing while recording. Then you guys get my actual reaction. That's insane. But let's go ahead and compare them, all right? So the shares value today, all of them are pretty much the same because all index funds, they follow each other in one way or the other. The dividends is different. For the dividends for SPY, for the full 8 years, if you invest 600K today, right? It's around 75,000 for SPY, 73,000 for IVV, 33,000 for QQQ, and 75,000 for VTI. For the expense ratio for SPY, for the entire full 8 years is $4,200. IVV is $1,400. QQQ is $9,300 a month, and VTI $1,400 a month. QQQ, man, Jesus, 10 grand. Just look at the dividends after the expense ratio, man. 24,000 compared to the rest of them. That's insane. There's two reasons why an index fund would have a high expense ratio rate. One, the index funds has high growth. And it's true, QQQ does have a higher average rate of return compared to the rest of them. And we'll do that in a bit, get the right percentages for them in a bit. But the second thing here for QQQ, why they have a high expense ratio, is because of their high track record of giving good returns. They take more risks, they're guaranteeing more higher returns, so they would charge you more, which would make sense. And again, as I said, we'll look at that together. We have 7% here. QQQ is more than double that. You'll see in a bit. Shares you guys need after the drip. So really, essentially, this is how much you guys would need invested rather than the shares needed now if you guys decide to do a drip program. And a drip program is pretty much reinvesting the dividends back into the stock, just buying more stock. So instead of 1464 for SPY, we get 1287, and instead of 1457, we got 1279, and then 1965 compared to 2049, and then 2556 compared to almost 3,000, you could say. And here are the values. I mean, you still need $500,000, and just a bit north than that, to invest today to retire by 2030 on a drip mode. So that's, again, not pocket change, absolutely not pocket change. No one has this much money just laying around doing nothing. And if I had this much money laying around, I would just put it into real estate, not into S&P 500, which makes sense why you guys would have 50% of your money not in S&P 500, like in the pool. Like, that's insane. Sheesh. And obviously, all of them will lead to $1 million by 2030, which is, yeah, we don't have this much money. I don't have that much money, and if I did, it'd be going all into Tesla stock. You guys already know. But let's go see their actual historic growth year over year for each one of them for SPY. For SPY, for the past 10 years, they were doing about 13%. For IVV, it was also 13%. For QQQ was 17%, and for VTI was 12%. So let's put that in, and let's see what we get. Starting off with SPY of 13%, and boom. Oh, wow, look at that. So instead of $500,000, we need $376,000. shares invested today or after drip around $330,000. Shares, instead of being 1,400, it's now 946, which is good news, or 832 after drip. So that's good. I mean, from 600,000 to, 367, that's a bit of a relief if they grow at 13% year over year from now to 2030. Not guaranteeing that. No one's guaranteeing that, but that's based on records. IVV, again, 13%. We should expect similar numbers. Yes, actually, it's the exact same number as SPY. The only difference here is that you guys get more bang for your money because there's less expense ratio here. Nonetheless, still you need 330,000 to invest today to retire by 2030. Still better than $600,000. Now, QQQ, 17%. That's insane. So I'm curious to see how this is going to change. Let's see, 70%. You guys ready? Let's go. Wow. Literally half if they grow at 17% year over year. 1,000 shares needed before drip, 962 after drip. Shares value today of $285,000. After drip is $273,000. So instead of 600,000, you need to have $250,000 to invest today in QQQ. So by 2030, you can retire, which is not bad. It's actually okay. If they grow at 17% year over year, that's almost a 3-4x, which is pretty darn good for an index fund. But again, still not pocket change. Let's see how VTI is going to do. VTI is the least out of all of them here, but I think it's the most safest because they take the least expense ratio, and they pay the highest dividend here, or the same dividend as SPY. So I guess your money is safer with VTI than the rest of them. But let's see, 12%, not much of a difference. Instead of 600,000, it's about 400,000, 2,028 shares. Pre-drip, after drip, 1774. Shares valued after drip, 350,000 north of that. Again, still not pocket change, but a whole lot better than 600,000. Now, in my opinion, if I had to choose what index fund I would invest in, and I wanted to be safe, I would go with VTI because this is a slow growth, but a guaranteed one at the same time. Again, expense ratio is dirt cheap. You get 1.6% dividends, so hopefully if inflation goes to 2% or below that, this covers it, hopefully. But if I want a high growth and a higher risk one, I'd go for QQQ. But again, it's high risk, it's not guaranteed. But who am I kidding? I'm going all into Tesla stock, so I guess QQQ doesn't even look risky to me at all. Nonetheless, all these 4 index funds, the S&P 500 index funds, they're pretty solid and guarantees you you'll make a return if you stick with them for a long time. In my opinion, not financial advice, but in my opinion, S&P 500 is a guaranteed way to make money long term, given the fact that you stay in it for at least 10 years and you continue to contribute to it $200 a month, $300 a month. By 20, 30, 40 years, you're gonna have a lot of money thanks to the compounding effect. And any of these 4 are actually really good. Let's see how this will look like after 2030. And I made this chart over here. So this chart is very, very straightforward and simple. We have the capital by 2030. You made $1 million. Congratulations. We got the gains year over year. For example, from 2030 to 2031, you made 70 grand. And then from 2031 to 2032, you made 74,900. And then 2031 to 2032, about 80 grand, and so on and so forth. Compounding effect at a 7% year over year growth. Now, we did say that by 2030, you need to have around $72,000 to live comfortably. Not on a minimum lifestyle, but just comfortably. You're comfortable. You can do things. Not living paycheck to paycheck. And in that case, if you go ahead and subtract or take away $72,000, we are left with negative 2,000 gains. For 2031, the principal has gone less from 1 million to $998,000. If we continue that every single year, because now you're retired, you want to chill and live off the compounding effect and interest of your money in the S&P 500. We can see that your capital that you started off with $1 million and you take away $72,000 every single year. By 2040, the principal is down only by $27,000 or $28,000, which is amazing. And if you continue this for about 40 to 45 years, it'll be zero. Obviously, you're not going to sit around and do nothing. I'm pretty sure you're going to start side hustles. You're going to start small businesses here and there. And this will be like your cushion. You're not worry money because you got money coming in regardless of whatever happens. And anything else you make from your side hustle, from your side business, from your small business, will just add on to it. So even better. But obviously, we all know that every single year, they don't give 7% growth. Some years they give negative 10%. Other years they give up 20%. So really, it's not really a realistic, it's more of a theory than reality, because obviously reality, there's ups and downs. And in this chart, it doesn't take that factor in. It just gives you an idea. But these particular S&P 500 index funds, they were growing above 10% annual growth year over year, which is absolutely amazing. So year over year growth, I'm going to change it to 10%. It changes a lot. Take out $72,000 per year. you're still going to be left with 28,000 gains for the year after, which will compound 10%, and then $31,000 a year after that, which will compound, and yada yada yada. As you guys can see, instead of losing $27,000, you guys gained $500,000, and you guys were withdrawing $72,000 a year. I mean, that's insane. That's the power of keeping your money invested and taking the interest out and leaving the principal in. This is the power. At this point, if you're making 10% year over year growth, you can look at your annual withdrawal and say, wow, I'm going to increase this to every year up to like 80,000 or something. And yet, if we do that for every single year, look at that. You're still, that's insane. That's absolutely insane. That's the power of investing. Again, guys, I have to stress this enough. This is not 100% realistic because stocks don't go up every single year, or index fund doesn't go every single year 10%. One year you're down negative 2%, one day you're up 20%. It averages out to 10%. And if you take a 50-year period, long period, that's when you will see the 10%, 10%, 12%. A great example is this year. This year, everything's down like 20%. Good luck withdrawing now because compounding will affect big time next year. But nonetheless, guys, if you guys invest like this and you guys withdraw money like this, then you guys will probably have infinite money for a very long time. This is how you guys can invest and live your life in a way that you don't end up becoming broke, by taking out the interest from your investment and leaving your principal in there to continue to work. As soon as that principal is out, you don't have any generation unless you put that money into a business or into another investment that gives a return. But that also comes risks, and if you're, let's say, 50, 60, 70, 80, you really don't want to take that risk. You might as well, and rightfully so, have a cushion like this and start something on the side with, whoever, and doing whatever you like. But nonetheless, guys, SPY, QQQ, VTI, IVV, these are great long-term holds if you guys want your money to be safe and steadily increasing year over year or every other year. It's a great place to park your money for a long time. And this is something that Warren Buffett always says, and all other big financial advisors say it too. If you don't have the stomach to invest in a company like Tesla, which I'm going all in because it's too volatile, then the S&P 500 is the best place for you. Invest $200 every month, continuously and religiously for the next 10, 20, 30, 40 years, and you're going to come out with it guaranteed making money. However, if you guys don't have $600,000 or $300,000 to plow into these index funds to retire by 2030, well then check out this Tesla retirement video by 2030. The amount of money you guys need today to invest is crazy. It's absolutely insane. And I'm going all into Tesla stock, so sheesh, it's good stuff. You guys can support the channel by checking out some merch, wallpaper, t-shirt, or becoming a channel member on the channel. And don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.